Come on, guys. Let's solve question number 3B from our May 2024 examination. This is a question on cash flow statement for 7 marks. This is not a question which is very unique or different or difficult, because we have 2 questions in our classroom material what we solve in the class, which is exactly same to this. Not even one. 2 questions. Just the numbers are different. Have a look at question number 15 that we usually solve in class. P&L, general reserve, dividend, and list of items, opening and closing balances. Adjustment is there with regard to income tax, dividend, debenture, and investments. Look at this question in the exam. P&L, provision for tax, general reserve, 12% debentures, list of items, opening and closing balance. You are required to prepare CFS. Look at the adjustment. Income tax paid, new debentures, new investments. In fact, we had one adjustment extra in our material, that is on dividend. Not one. I'll show you another question. The very next question, question number 16. Again, P&L, general reserve, dividend, provision for tax, debentures, trade payables, fixed assets, everything. And adjustment is there for tax, dividend, debentures, investment. Same to same. In fact, we have one adjustment extra, dividend. They made the question slightly simpler. And we have P&L opening debit, closing credit. P&L opening debit, closing credit. Now tell me, is the paper very difficult and different? Definitely no. However, let's solve this question. Let's get started in the books of RM Limited, question number 3B, 7 marks question. To start with, we have P&L account balance. Opening 5,400 debit, closing 37,800, which means at the beginning of the year, we had minus 5,400 in our P&L account. At the end of the year, we have 37,800. Take your calculator. Minus 5,400 to 37,800 is 37,800 minus of minus 5,400, meaning add them. 37,800 plus 5,400. 43,200 would have been the profit earned during the year if there was no movement in reserves and other items. Dividend is not there in this, unlike what we do here. So reserves. Now reserves difference is how much? 54 and 81. From 54, reserves has increased to 81. Profit has gone from minus 5,400 to 37,800. So 37,800 plus 5,400 is profit earned. Along with that, 54 to 81 movement is about how much? 27,000 has been transferred to general reserve. That is also from P&L. You had taken 37,800 plus 5,400. To that add 27,000. That is increase in reserves and increase in profit. 70,200 is our net profit earned during the year. Very simple. But you would not be able to do this way in the exam unless you are really smart. Then what do you do? Very simple. Open ledger account. Close P&L account at the end and close all other ledger accounts before that. I will open my P&L ledger. Shall I open my P&L ledger? Let me close this. I'll open my P&L account. In P&L account, I'll write opening balance on the debit side because they've told it's on the debit side. How much? 5,400. Closing balance is again on the debit side because it is closing credit balance. 37,800. If this would have come on the other side, we would have taken difference between them as profit for the current year. However, they're on both sides. That's the reason I made you do 37,800 plus 5,400. Did you all understand? After this, the next item that we have is provision for tax. Provision for tax at the beginning is 2,21,400. At the end of there is 1,35,000. Please don't tell difference between 221,400 and 1,35,000 is tax paid. No. There is provision further created during the year. Previous year's provision for tax will be paid current year. Current year's provision for tax will be paid next year. So if we are absolutely correct with our provision, entire 221,400 should have been paid during current year and 1,35,000 is expense debited to P&L account in current year. But we cannot say that with authority. So what do? I'll open ledger and wait till the end. Because sometimes the provision that you create and the actual expenditure might be different, because of which you might be forced to create further provision. And one humble request for provision, please don't do current asset or current liability treatment, changes in working capital, closing minus opening. Please don't do it. Open ledger. How much is provision for tax? Opening 221,400. Closing 1,35,000. I'll write here balance brought down 2,21,400. Balance carried down 1,35,000. Did everyone get this? Very good. After provision for tax. Let me now go to next item. General reserve. This reserve is increasing from 54 to 81. This increase 54 to 81 is the provision, is the reserve that is been arising because of the amount transferred is from P&L. We'll write in general reserve account by general reserve balance brought down 54 to balance carried on 81. We can close it right now, but we'll always follow order. We are RCB fans, no, not MI. So we'll prepare all the ledger accounts and all the adjustments, we'll write them, then we'll close one at a time. So I'll write the opening closing balance and then relax. Next, 12% debenture. Opening 1,18,800, closing 2,91,600. The increase in debenture account is further issue of debentures during the year. This is financing outflow. How will this impact our operating outflow? Depending upon when is the debentures issued, we would have to compute interest. If this debentures difference is issued at the beginning of the year, throughout the year outstanding is closing balance, we compute interest on closing balance. However, if the issue of debentures is at the end of the year, throughout the year outstanding is opening balance. Only in the last day of the year the balance is changing. So then I compute my interest on the opening balance. So right now we don't know when is it issued. It will be given in adjustment. I can read, but I told you again, no Hardik Pandya, Virat Kohli, order. You get that? Order. So I'll write 12% debentures ledger by balance brought down 1,18,800. To balance carried down 2,91,600. Okay, clear? Then after this, then we have trade payables. It's a current liability. I will do closing minus opening. In changes in working capital in cash flow statement, I'll take 1,18,800 and from that I'll deduct 1,29,600. Remember, for current liabilities you will always do closing minus opening. For current assets you will do opening minus closing, and don't include provisions, dividend payable and cash and cash equivalent inside this. Or if there is any marketable securities or bank balance, don't include them in current assets and current liability statement as changes in working capital. So let me do 118,800 minus 129,600. Where in my cash flow statement, from net profit we'll do changes for non-operating non-cash items in P&L, then changes in working capital, trade payable, closing minus opening, 1,18,800 minus 129,600 minus 10,800. Got it? After the trade payables, 8% current investments. Yeah, though current investments are current in nature, don't treat them like current assets in changes in working capital. It is investing activity. You would have to open ledger. How much is opening current investments? Closing. So there is increase. This increase could have happened on first day, last day, any day. Sir, how does it impact? Whenever you buy investments, it is investing outflow. It is not going to appear in our cash flow statement under operating activities. But it is still important because when we compute interest income on these investments, if the purchase is at the beginning, interest will be computed on the closing balance because what's outstanding is closing balance throughout. If the purchase is at the end of the year, throughout what's outstanding is opening balance, so interest income will be computed on opening balance. Right now, do we know whether the purchase is at the beginning or at the end? We don't know. There can be purchase sale also, but ICAI's examination level question doesn't have so much complexity. What will we do? We'll open one 8% investment ledger. I will write opening balance 54, closing balance 1,08,000 and then wait till the end. Shall we? Then we have property, plant and equipment. Very nice and easy thing. Opening 399,600, closing 399,600. What does that mean? No purchase, no sale, no cash flow, so no ledger. No purchase, no sale, no cash flow, so no ledger. If you want, you can prepare a very cute ledger like this. Balance brought down 399,600, balance carried on 399,600. No use. No use. Yeah, like our brain sometimes. Accumulated depreciation. Opening is 129,600, closing is 1,62,000. So accumulated depreciation increased. That is current year depreciation. How much is depreciation that is provided during current year? 1,62,000 minus 129,600. 32,400 is the depreciation provided during the year. This would have been written in P&L account debit side. But depreciation is not a cash expenditure. You don't pay cash. From net profit, we're trying to find cash profit. So we eliminate the items which are debited or credited in P&L, which are non-cash. Depreciation is a non-cash expense which is debited in P&L. So though it is non-cash item, it is deducted in finding profit. If I have to find cash profit, I would have to add back because it was previously deducted. In arriving at net profit, I'll add it back to net profit. Shall I? In my cash flow statement to net profit, which I'm yet to find, I will add back non-cash expense debited to P&L account 32,400. which is arrived at by taking 1,62,000 and deducting 1,29,600 from the same. Do you all get it? What do we have after this? Trade receivables. This is a current asset. I will do opening minus closing. Shall I do 81,000 minus 2,61,360? I'll take it in my cash flow statement. Shall I? Very good. Come on here. In cash flow statement, changes in working capital, I'll write trade receivables. 81,000 minus 2,61,360, which is 1,80,360. Just to make you understand, why am I adding this? Do you want to know the reason? How much is the opening balance of trade receivables? 81,000. How much is closing balance? Assuming that there is no cash transaction in this, there can be purchase, sales as well as cash. Let us assume that entire thing is only sales. So difference 180,000, 1,80,360 is sales. Correct? No. In the beginning of the year, you are supposed to pay the trade receivables 81,000. End of the year, you are supposed to pay them 261,360. So you have sold them goods worth 1,80,360 on credit. On in trading account, would have you written cash sales only or total sales? Total sales. So there you would have written credit sales of 180,360. It is credited, but it is non-cash. Non-cash item credited in trading P&L. Because of this, profit has increased. Now we'll deduct it. That's the reason I'm deducting this. You get it? Sir, but why do we do changes in working capital? Why don't we write it here? Because unlike this depreciation and other ledger, items what will come here, no trade payable, trade receivable, inventory. There will be too many transactions inside. There will be hundreds of sales, hundreds of purchase. Inventory account to both purchase and sale. Too complex, no? So we'll take net difference. So we'll take, that is the reason it comes as changes in working capital. Trading account will ignore, only P&L account will do changes. Here, P&L account changes will do here. Trading account changes will do here. Did you understand the logic? After trade receivables, provision for doubtful debts. Please don't treat provision as current liability. If you treat it as current liability and then do, your answer will match. It will be still correct but not appropriate. Provision opening is how much? 27. Closing is how much? Can I say provision has been created during the year to the extent of 27,000? When you create provision, it is an expense. When you create provision, 27,000 additionally is an expense. That expense is debited to P&L. It is non-cash expense debited to P&L. So we add back. Sir, I am not able to process so much. Then simple, open one ledger, provision for depreciation. Sorry, provision for doubtful debts. Right, opening balance on the credit side 27, closing balance on the debit side 54. I'll show the ledger if you want. Sir, but is it mandatory to prepare? Not required. You can skip. Provision for input. That will give you same answer. If you deduct it from trade receivables and then take the new trade receivables, net trade receivables, answer will be correct, but presentation is wrong. Answer will be correct. Balance brought down. Balance brought down is how much? So I'll write here 2. Carry down. How much? So we can tell no here. The difference is by profit and loss account. This is balancing figure that I found. That is provision created. क्या करे को पना कैमरा में ले 54 minus 27 27,000. That is provision created during the year. P&L account. Non-cash expense debited to P&L. I'll add back 27,000. Or you can skip the ledger and then straight away write 27. I'm writing it in detail so that you wouldn't have doubt later. After that, inventory. Current asset. Shall I do opening minus closing? 1,35,000 minus 81. Inventory 135 minus 81, 54,000. Everyone's got this? Then I have cash and cash equivalent. This will go to cash flow statement not changes in working capital. But when you have operating, investing and financing, in this question they've asked us only operating, given us information to do only operating, we are doing only operating, so ignore it. Only mistake that you can do here is take it in changes in working capital, which is not a mistake actually, it is a blunder. You might just get killed by that, killed because of it. So who will kill? Nane. If you do blunders like that, I'll kill. Truth. Income tax provided during the year 1,62,000. This is provision created during the year. So in P&L account, you would write this on the debit side. In provision for tax account, you will write it credit side by current year tax provision 162. So this is debited in P&L, non-cash expense debited to P&L. What do we do? Add back. Because it is non-cash expense debited to P&L, I will add back. Where? Here, I'll add back. Provision for income tax, 1,62,000. What do we have after this? New debentures have been issued at the end of current financial year. So we will do that. Come to ledger of debentures. 118,800 and 291,600. 291,600 minus 118,800 is how much? Debentures issued is 1,72,800. This is financing inflow. Will it come in operating activity? No. These debentures have been issued when? End of the year. So if you issue it at the end of the year, throughout the year debentures outstanding is opening balance 1,18,800. Our expense for debentures, that is by way of interest, will be 1,18,800 into 12%, 14,256. If this is expense, it would have been debited to P&L account. This is non-operating expense debited to P&L. So what do? I'll add it back in my cash flow statement. Let me write here interest on debentures 14,256. The next thing that I want you to notice, we are assuming that this is paid. If in case this was not paid, then it would be current liability, changes in working capital, closing minus opening. When I should do, I'll write minus 14,256 here. If in case I assume that it is not paid, however, we'll assume that it is paid. Why? Unless mentioned that you have done a crime, you have not done a crime. Further, it is assumed that it is paid. Otherwise, we would have taken it in changes in working capital. You get it? Very good. After we finish this adjustment, then we'll go to new investments have been acquired at the end of the current year. So, investment account 54 to 108 difference of 54 is investments purchased during the current year. That is at the end of the year. Doesn't matter. Whenever it is purchased, it is investing outflow. Investing, we're doing only operating. So this won't be written in my cash flow statement in this question. But throughout the year, investments outstanding is opening balance of 54. Why? This was bought at the end. So on the opening balance of 54,000 at 8%, interest is income. This income is credited in P&L. This is non-operating income credited to P&L. So I will deduct it. Shall I? Right here, interest on 10% current investments minus 4,320. 54,000 into 8%. Further, I will assume that this interest is received and it is investing inflow. If in case I assume that it is not received, then what would happen? It would become current asset. Then I would have to write it in changes in working capital, opening minus closing. So I would have to write it as a positive number. But we are assuming that it is paid. Received. So we're done with the entire question. You're supposed to prepare cash flow from operating activities. If you remember, I read the question in the order, and in the same order of the question, I started solving the question. This will solve the problem of you not being allowed to scribble anything on the question paper in the exam. Now, my answer is 99% over. I have to just close the ledgers, identify the balance and figures. In each ledger, show the impact on profit, identify my profit, put it to cash flow is khatam. Remember, this profit and loss account is a ledger to be closed at the end. Why? This is the beginning of CFS, so this is the end of working note. Come to provision for tax. I'll tell you a shortcut to remember. In a ledger, there will be one P&L account, one cash account. If cash account is already there, balance and figure will be P&L account. If P&L account is already there, balance and figure will be cash account. This is dumb logic. You get this dumb thing. But logically, what is happening? Provision that was there opening is 221,400. Further created during the year 162. If you add them together, you will get 383,400. Out of 383,400 rupees of provision, 1,35,000 worth of provision is still balanced to be paid. So minus that, you will get amount of tax paid during the year. 248,400 tax paid during the year is cash outflow. It is operating cash outflow. We'll start with net profit. changes with regard to, sorry, adjustment for non-operating non-cash items, changes in working capital, less tax paid. So I'll write tax paid 248,400 in our cash flow statement. Here, less tax paid 2,48,400. Did everyone understand this? We are done with our provision for tax ledger. Come to general reserve. How did 54 become 81? There is some amount of profit transferred to reserve during the year. How much is that? That is 27,000. In our general reserve, if I am writing by P&L, in P&L account I will write to general reserve. How much? 27. That is some amount of profit which is transferred to general reserve during the year. This will add on to help us determine our net profit for the year. We'll do it. Don't worry. This ledger will be closed at the end. So come to next item. General reserve account over. Debenture account over. Debenture account is already closed. Then come to 8% current investment. Already closed. Property, plant and equipment. Not required. Not required. Balance is matching. Provision for doubtful debts already closed. So we usually used to have dividend adjustment in our class. But this question in the ICA examination is actually simpler. There is no dividend adjustment. Take the total. Quickly help me find how much is the profit here. 70,200 is our profit for the current year. So how did we get this? We had minus 1,000 in our reserves at the end of the year. From minus 1,000, we have gone to 0. From that 0, we have transferred 27,000 to general reserve. Still we have 37,800. You get this? So 37,800 plus 5,400 plus 27,000. Journey from minus 5,400 to 37,800 is increase in profit. Further, we'll add transferred reserve, which is also profit. That give us 70,200. I'll take 70,200 here. Net profit to start with. Tell me how much is this add or less items? What to say, non-cash or non-operating items to be adjusted from P&L. 2,31,336. Changes in working capital will be minus 10,800 minus 180,360 plus 54. 1,37,160. Take the total of this. You will get 164,376 minus 248,400. You will get 84,024. This is your cash flow from operating activities from your May 24 examination question. Got it?